Welcome to our last objective, number 6, maximize tax deferral benefits of the variable annuity here on perfectvariableannuity.com. And here we're just going to talk about the power of tax deferral. This is nothing new. This is something that's been around for a very long time. But I want to go back to each objective. I've tried to say this over and over again. The whole idea of perfectvariableannuity.com is not that we're trying to tell you there is a perfect variable annuity. The perfect variable annuity is the one you designed. It's the one that's built specifically for what you are trying to do. And, you know, if we went through all of the objectives here, it would have a simple goal. It would be simple to manage, first and foremost. Secondly, you could actively manage the portfolio. You wouldn't have any limitations to how you manage it. It has plenty of options for you to manage it within. You can maximize your income by deferring the growth and then spinning out the growth and creating income. You have minimum riders. You minimize the fees to the account, and you maximize the growth. I mean, to me, that's the perfect variable annuity. That's what it does. I mean, I've tried to hash and rehash this way many ways, and what I keep coming up with is that this really is an investment product. It really is a security. It really is stocks and bonds, and it really is where when you put your money in, you do have risk. And if you don't manage the risk, then you stand to lose money. And that's why variable annuities got such a black eye, if you will, back in 2000 through 2002, is people really didn't understand how much money they could lose. And so they started to create riders in these things that would guarantee death benefit, guarantee systematic withdrawals, guarantee whatever. And then in the correction of 2007 and 8, then what people realized is that these corrections come along a little bit more often than we thought. And there we started to get the guaranteed income benefit riders. We started to get all of these new bells and whistles as they exist today. And they started to weigh down variable annuity products with fees. And I think you're going to see the next evolution is how do these companies cope with the guarantees that they've put out there? In other words, when you look at a fixed annuity is owned by the insurance company, and therefore they get to invest the money, they control the asset, and therefore they can reserve against the future liabilities of the guarantees within their contract. When you own a variable annuity, the insurance company does not own the asset. The asset is owned by you and by the investment company of which the money resides. In other words, as we talked about in the first objective, these are segregated assets. They're not owned by the insurance company. So therefore, the insurance company has no way of reserving against the risk. And they're going to have to reserve a different way, and they're going to have to come up with a different methodology. I got a big question of whether or not they're going to be able to do it, and could this be the next financial problem that we see on the horizon is variable annuities trying to honor their guarantees. And that, I think, is a legitimate question that we have to ask. And, the top three variable annuity insurance companies sell over 80% of variable annuities. That means they've got a mass of assets and a mass of guarantees and liabilities that they are somehow going to have to reserve against. And I'm not convinced that they're actually doing it, but that's another conversation for another time. But I think you got to ask yourself the right questions. Why did I buy this? I bought it because I wanted to maximize the tax deferral. So maximize them. We created for maximizing tax benefits a trading process that we call the one-egg strategy or the one-egg model, which you can see right here. And the one-egg model is really designed to maximize growth, and it's really a trading model. And I'm going to say that up front. It's a trading model. It's not for everybody. Sometimes it's not for anybody. But when you look at the trading model, what it is that we are looking at this as exactly that, a way that we can trade. And I just want to flip back to the archives to say, all right, how do we do this? Well, the way that we did this was we said when we designed this back in March was we actually designed this longer ago than that, but we launched this particular model for variable annuities in March. And when we looked at this model, what was the premise? The premise was maximum growth. And with that, you're going to get maximum risk. In other words, you're going to take a lot of risk doing this. And therefore, I must have some methodology of managing that risk. And that's what we created, was what we call a one-egg model that manages risk week by week, day by day, relative to the market environment we're in. So what are we looking for? We're looking for momentum. We're looking for things that are moving. And when we do this, that we use the underlying assets within the annuity, and we put, in this example is we start with $100,000, so we put 100% of the asset into the egg, and that's why it's called one egg. And an example would be, as you can see, the first one here is ProFunds Utility, 2 times leveraged fund. So we put 100% into that one fund, and we manage the entry, the exit, and the target. And we're looking short-term momentum. The holding period is designed to be 7 to 30 days. We want to average a return of about 1.5% to 2% per month, and we want to manage the risk. And that's really how it was built. It's basically a trading mechanism to maximize tax-deferred growth. And when you look at the archives here, through here, you're going to have losses. Obviously, you're going to have gains. The whole process is, how do I get to the maximum growth? Why am I doing this? Why would I say this? I mean, if I don't have to pay the taxes until I take it out, then what I'm trying to do is maximize the return on investment. And you can see down here at the bottom that if it's earned $50,000, then I can, if I've now say, all right, I want to take that $50,000 and I want to guarantee income from my maximum growth benefits, then I can do that. I can flip the $50,000 into a single premium immediate annuity, and I can start the income stream. That is it's just a model that I built that said, how can I maximize my benefits? And this can be done with any number of annuities. It's just as a matter of whether or not they have the tools, in other words, the asset portfolios within it to do it. And then secondly is, do they limit the number of transactions that you do? Because since March, remember the number of transactions in here, but we've had about 16 transactions over the last, the recording of this is in October, so we'll say March to October, we've had it at 7 months out there, you've had about 16, so you're averaging, 2 trades a month. Are they going to let you do that? And that's really the crux of the matter. We do have annuities that allow us to do that, and those are the annuities that we designed the model for, but you can try to custom fit it to whatever you're trying to accomplish. But I want to emphasize the fact that this model is built for maximum tax deferral. In other words, we're looking for maximum growth, and we know that we're going to take maximum risk, and the key to the whole model is management of that risk day to day, week to week. And so we're not looking at long-term time horizons. We're looking for shorter-term trading models, and we use them within the variable annuity because we don't have to pay the taxes, and that's why we built the whole process. So the whole premise of objective number 6 is maximize the tax deferral benefits. The primary reason for owning a variable annuity is tax-deferred growth. Manage the money as if it matters. To me, that manages risk. That's managing the risk process, and then convert the growth to guaranteed income. And when it gets to a dollar amount, let's say you start with $500,000 and it grows 15%, convert the growth, the $75,000, convert it to guaranteed income. Do what you need to do to get to where you want to go. I'm just providing you a conduit to do that with. And how we do that is we do it via You can do it yourself. You can follow the models. You like it, great. You don't. If you want to look at us to help you manage the money, up here at the top, we give you these things, why hire us to help manage your existing variable annuity or a variable annuity for you. You can click on read the benefits. Bottom line is I think that we're very proactive towards trying to maximize benefits of annuity contracts, whether that's a conservative investment portfolio or a high-risk investment portfolio. Understand, it's full disclosure. Every client fills out an investment policy statement, which for us is vital. It means it's in writing. We know what the goal and the objective is between the two of us, and we manage the money that way. You have full access online to your accounts. You see everything. You see what we're doing. You can talk to us on a regular basis, but the key is use what's out there. Perfect Variable Annuity is designed in a way that you customize the pieces. You customize the parts to meet the whole objective that you have, not that I have, and that's what it's all about. So I hope that as you've gone through these 6 objectives, you've kind of gleaned an insight into what we're doing. We have plenty of other information, data. You can call me, 1-800-369-5759, 800-369-5759. I'll be happy to talk to you about it. If you'd like to talk to us about the website, you can call the same 800 number. If you want to go on the website, all the stuff is linked out there to our money management company, Money Strategies Incorporated. All of it's there. We're here because we have a passion for truth and helping people manage their money. That's what it's all about. I want to thank you for taking your valuable time to listen to the Perfect Variable Annuity 6 Objectives to Managing Your Variable Annuity. I'm Jim Farish, founder and editor of PerfectVariableAnnuity.com.